thanks for joining me on my market report. My name is Mike. My market report is on mortgage rates. We discuss on a daily basis what's impacting mortgage rates and whether it might come something from the economic calendar or something from the headline news or geopolitical. Sometimes it can get a little more confusing when the market sentiment changes, so good news is now bad news and vice versa. And we try to give an explanation as to what's in the minds of these investors as to what's driving the markets and hopefully give you the information you're seeking here to help make you an informed decision if you're looking to lock in or if you're looking to float a little bit longer, wait until rates get a little bit better or whatnot. Hopefully this will give you the information you're looking for. If you're in the industry, hopefully this is giving you the information to kind of give you an idea what's going on with the markets and hopefully where they're heading towards with the different markets, mortgage rates trends here. A little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states, so we can be of any assistance, whether it might be a refinance and run some numbers. We're here to help you guys out if you're looking to get pre-approved to buy your next property. Again, we're here to help you guys out. But more than that, we could be a resource for you folks. If you guys like to have any questions or that you would like to pose, please post it, and we'll see what we can, what answers we can find for you guys. All right, so without further ado, we got a big day today in terms of economic calendar, so we'll jump right into it. I'm going to go to a different page because it provides a little bit more information of what's being released than what we see right here. So we'll jump right over to here. The first one is the employment costs. We have the Q1 employment costs, which are up, as you can see here. It was initially the previous quarter was at 1%. Forecast for Q1 was at 1.1, and it came in at 1.4. So we're seeing a bit of an uptick in terms of employment costs. And as you can glance up here, part of it's wages, but also part of it is benefits jumped, skyrocketed. Let's move down here a little bit more. We got consumer spending. So for the month of March, so in February, it was only a 0.2% increase. Forecast going for 0.7%, and it jumped up to 1.1%. So people are out spending on the month of March. On the other hand, we got the personal income. Where is that again? Personal income is right here. Sorry about that. We had for the month of March, we had a 0.5% back in February. Forecast come 0.4%, and it came in at 0.5%. So again, we're starting to see a rise in wages, which is, again, inflationary data, so it's something we have to be careful on. And speaking of inflation data, we got the Fed's favorite gauge for inflation today, which is the core PCE. But first, we'll start off with the headline PC, which stands for the Personal Consumption Expenditure. Here's the headline here. Back in February, we saw a rise of 0.6%. And now, month of March, it had a pretty big spike to 0.9%. That brought, let's see here, and then, so okay, it's not showing the year over year, but the month over month for the core, it went from 0.4% in February to coming in at expectations at 0.3% in March. So that one part sounds pretty good. And then the core, or no, here's the year over year, my bad. That one jumped from 6.4 to 6.6. So my apologies about that. The headline news year over year, we did find that it did go rise up here. But the core, if you look at the core, it dropped. And that's really kind of what we look at the real inflation, because what the core is, it excludes food and energy, which are two variables that we cannot control. So this just gives us our basis to work with. And that went from 5.4 down to 5.2, beating expectations, which is good news on there. Then we got the Chicago PMI. This is a index that gauges the manufacturing in the Chicago region. Anything above 50 is good expansion. So we had a really good month, as you can see here, back in March at 62.9. Forecast was supposed to be a slight dip to 62, and it had a pretty big drop down to 56.4. Now, last but not least, we got consumer sentiment for the month of April. So back in March, it was at 65.7. It was supposed to remain unchanged, and it dipped a little bit down to 65.2. So let's see how the markets are looking, and right now, not so good. As we can see here, mortgage-backed securities, as the time came out for the PCE, let's just say it started dropping. It came out like at 5:30 in the morning, and as you can see, we dropped at that time. And why is that? The core PCE year-over-year drop, which looks like it could potentially be peaking, as we've been hearing from a lot of investors are saying, or at least they're interpreting that we peaked. However, that headline news came in, and then on top of that, you got the employment with the employment costs going upwards, and we're seeing wages still a factor here, which will, again, that is inflationary data, and that's something we have to watch for, and that continued to rise. So that's what kind of drove the markets down. Even though core PCE came in a little bit better, the other ones are still inflationary pressures that could bump that back up long term here, and we saw that come drive the market downwards. Now, right around 7ish, as you can see here, we had the consumer sentiment, so that helped a little bit here. The consumer sentiment came out around 7ish, and since then we've been kind of almost in this sideways pattern, and then we kind of worsened a little bit again. Working down. Right now we're down about 39 basis points. As you saw earlier, we're probably down around 43 basis points. Now, let's touch on what we did yesterday. Yesterday ended up being in positive. We ended up closing in positive territory. We were down for quite a bit of the day. We were down at one point like around 30 basis points, and when I did the video, it was probably right around 12 basis points around that range. So, and then we end up closing up 3 basis points. So that kind of helped the markets out. So we'll wait and see what transpires today if we can get that type of footing. But also look, we got to look ahead. Next week is the FOMC meeting, which we're expecting half a basis points, and then pretty much the start of the balance sheet reduction. So they're gonna probably look to reduce the balance sheet here at that point. So stay tuned for that coming ahead. But the markets will probably at some point start trying to position itself ahead of time to see what the Fed says and before it decides what it's going to do here. Now the 10-year Treasury, we're up again. We're almost at 2.9, so we're at 2.89 right now. Basically just rounding off here, and so again we're still watching these. It's adding more pressure to the mortgage-backed securities here. Last but not least, let's touch base on what the average rate for a conforming loan limit looks like. So the 30-year now is up at 5.4, and the 15-year is now at 4.83. So if you missed that 30-year, here it is again at 5.4. And again, these do have points built into them. If you guys would like, and there's not one size fit all, so rates do vary for each person because of different variables that factor for each one. But if you guys would like a rate quote, just reach out. We can certainly work with you guys on that as well. That's pretty much the wrap for the day. If you guys got any questions or anything we can do for you folks, again, we're here. Please feel free to reach out. If you guys like these videos, please help us out. We greatly appreciate you folks. If you guys could like and share our videos, we greatly like to help the channel out here. Greatly appreciate that. We thank you very much for your time, and we wish you guys a great day and enjoy your weekend. And we'll look forward to see you guys on Monday's video. Take care. Bye-bye.